how venture firms are investing in DeFi today. My name is Rishin Sharma, and I'm a manager at the Cypher Accelerator at the Wharton School. Cypher is going to be a brand new university blockchain-focused accelerator, which is going to be accelerating early-stage blockchain and crypto startups. And joining me today, I have Yanakieva from Outlier Ventures. We have Shane Kehoe from SVK Crypto VC and Vanessa Grellet from CoinFund. Panel, thank you so much for joining us today. How are we feeling?
Great. Greetings from the Solana conference.
Awesome. So why not
Yeah.
to start out, could we do a quick background and intro
Have
on...
we an issue with audio?
Oh, yep. Yeah. Shane, we can hear you. So to start out, why don't we just start off
I
with
can't seem to hear
quick...
Rishan.
Anna, Vanessa, am I coming through to you guys?
Yeah.
Can you hear us?
Yes, yeah, I can hear you both. Shane, I think you're on a bit of a delay, so maybe try turning your camera off. But to start off, why don't we just jump into some quick backgrounds and intros to you guys, your journeys, and the funds that you work at. Anna, why don't you start us off?
Yeah, absolutely. Well, thanks everybody. It's a pleasure having you here. I know Ian wants some questions from the audience, so drop them down in the comment section. But quick background on me: I spent the past 4.5 years in venture. Started off in traditional venture, and then went into crypto in basically what was it March 2018, which is like the very first month of the last nuclear bear market, which was an interesting time to join as a new investor in the space, as a new person, because we have like very few investors actually saw like a actual bear market in traditional markets. So with cryptos, like your experience just like the cycle multiplies, your experience just goes like really quickly. And yeah, with Outlier Ventures, we are focused on accelerating the next generation of Web3 businesses. So we have been committed to that for the past 8 years. We've worked with over 90 companies, and we're looking to do another at least 100 next year. So yeah, always on the lookout for good founders. We focus on like earlier stages. So yeah, we don't really discriminate between DeFi, NFTs, or gaming. We look at anything Metaverse related. So yeah, it's a really interesting space to be in.
That's awesome, and hopefully we'll have time to touch on some of those interesting topics that you brought up. Vanessa, I would love to hear from you.
Hey everyone, I'm Vanessa Grellet. I'm the head of portfolio growth at CoinFund. CoinFund is an early stage VC fund that started in 2015. We've invested in sort of all the layer ones and their ecosystem. We were very early in the NFTs. And my background is really excited about DeFi. I worked for 5 years prior to joining CoinFund at Consensus, where I was an executive director. So coming in very early in the Ethereum space in 2016. And prior to that, I spent 15 years in financial services, where I worked for over 10 years at the New York Stock Exchange in corporate strategy and M&A, and focusing also on the derivatives market. So for me, the emergence of DeFi is really everything that we can get right in terms of financial services. So pretty excited to talk about this today.
Awesome, and Shane, how about you?
Vanessa, where are you? That looks really beautiful where you are.
I'm at the Solana conference, and I apologize for the sunglasses, but this is the only place where it's a little bit calm. So pretty excited. We're all in Lisbon. There's been like 6 week conferences back to back, and to see how diverse and innovative the space is so enlightening.
Yeah, well,
The
it looks
weather looks a lot better.
beautiful.
Sorry, Shane, go ahead.
It looks beautiful. I was just wondering where she was. It looks gorgeous.
Shane, do you think that you could introduce yourself for the rest of the panel before we dive into the rest of the questions?
Sure. Let me make it quick as time is important here. My name is Shane Kehoe. I'm the co-founder of SVK Crypto VC. We are a venture capital fund based in London. Since inception in 2017, I've been overseeing the flagship fund, which invests in very early stage C to Series A projects, all focused on layer one and layer two. We have invested alongside the likes of Kleiner Perkins, Google Ventures, Galaxy Digital, Vulcan Capital, Fidelity, Block One, and Alibaba. Prior to that, I'm an experienced portfolio manager. I was a PM and partner of a macro fund called Bluecrest Capital Management, where we oversaw about $35 billion of exposure in AUM. My job was to source, analyze, and invest into all capital market products. So very broad in nature, but I think that suits me quite well for where we are ideally positioned now with the crypto and blockchain space.
Perfect. Thank you so much. And with that, why don't we dive into our first question? So pretty broad, but a very visible trend that we're seeing is venture investing in crypto and blockchain has grown tremendously. This summer it was valued that investing in crypto companies had already surpassed $20 billion, which is already quadrupling the amount that was seen in 2020. And I guess my first question for you guys is, what do you think has driven this kind of growth in the investing in the crypto company space? Shane, why don't we throw it over to you to start out?
Yeah, I think it's quite evident that we are building a new asset class, and certainly when you look around the world for current investments, especially in this inflationary environment, it's very hard to generate any type of yield or return. Albeit that indices, particularly the S&P indices, have performed very well in the last 12 to 24 months. But every portfolio manager, certainly from the traditional type of finance, is looking for alpha, and that's hard to generate. I think when we look at what we've built here in the crypto and blockchain space, it's super exciting because it is an ideal venture product. We are breaking new ground. We are at the tipping edge of technology, culture, art, democratized finance. And really what I've seen, and I'm sure all my panel will agree, is the growth that we've had in this space. The builders have come. And I think if you're running a strategy, you have to have exposure to crypto, because hands down it will be an asset class which would be asymmetrical, performance and uncorrelated type of risk, and certainly looks like we're building, especially with what we've just seen recently with the developments in the Metaverse. And I know Outlier Ventures and the team over there have been focusing on Web3 for quite some time. When you start to look at what has been built from an investment standpoint, it's really hard to ignore it, and you shouldn't ignore it. And that's why we're much involved in the space it is today, because I believe it will be the best performing asset class and the most opportunities that we'll see from a venture perspective in the world today.
Vanessa, I'll throw it over to you then. So, given your background and long experience in the young industry in the crypto investing space, we saw a similar amount of growth where from 2017 to 2018, investing in crypto specific companies quadrupled. And obviously in 2018, we saw a bubble as a lot of investment left the space as the price of Ethereum and Bitcoin and other major protocols severely corrected. We're seeing this kind of high level growth today. How do you think that today's growth is different, if so at all?
Yeah, obviously, we're in a very different situation, right? We have competition amongst protocols. We have product market fit that really emerged with DeFi. We have the collusion of Web 2 and Web 3. And so the adoption with the consumer through NFTs. And then we have, the institutional money coming in and the trading actors coming in. So we're in a very, very different space in terms of, like, if you were to compare 2017 ICO booms and this. That being said, we do see very high valuations that sometimes are really unreasonable. We see a shift in the market structure of deals where, especially in the Solana ecosystem, a lot of the market makers, liquidity providers are very early in the funding rounds with the companies, which need to increase their AUM and TVL very quickly So I think we're, on a high. There might be some correction there, but in general, it's just going up. And it's really exciting. I'm dialing in from the Solana conference to see the diversity of new entrants coming in and really understanding financial markets and the opportunities that lie across cross-chain, and then leveraging existing infrastructure, and then in the new L1s.
Yeah, that's great. I think that this is definitely the case when we're seeing just a general maturity and growth in the space. I remember 2 years ago, people at NFT NYC were just like hobbyists of this new art form that had just been launched. And attending the conference last week, it was a full scale production. I think they said almost 60,000 NFT transactions were done. There's a waiting list of almost
It
five,
was great.
6,000 individuals for that ticket. So I guess we can use that as a convenient segue onto some of the topics that you guys had already begun to touch on, which were some of those really exciting new innovations in the Web3 and the DeFi space, such as non-fungible tokens and other DeFi protocols, dApps. I guess if you look high level at what kind of investments are coming into your pipeline and have come into your pipeline over the past year, what things are really exciting you, and do you feel like have the highest potential for driving that growth in the next 1 to 3 years? Vanessa, what are your thoughts on this?
Yeah, so CoinFund was very early investor in NFTs. We were early investors in Dapper, Pre-Seed, and Rarible. Jake and I have been very early in the space. And so, we see that continuous growth. And I said, working with Web2 type of narrative with consumer approach, the DAO approach to that. So we're pretty excited about that. Pretty excited about DAOs and DAOs infrastructure. I think we're very, very early in that space, and human coordination is not the easiest problem to tackle. So I think there will be a lot of things in that space, and you'll also see existing companies move into DAO type structures, maybe not for their entire business, but for some activity in order to drive alpha. The other thing that we're pretty excited about, which may not be that intuitive, and I'm sorry for the background noise,
Nice.
is really Web3 in the narrow sense. So really, decentralized Amazon, decentralized infrastructure, and privacy. I'm super bullish on privacy. I think that once all these DeFi protocols mature, like if we don't have privacy and if we don't have integrity of the information, it's not going to scale because large institutions are not going to come in. So I think those are the things we're on the lookout for. And of course, in the DeFi space, a lot of action in the options and cross cross layer one products.
Definitely. It seems like there's a lot of growth in a number of different areas. I'll throw it to you, Shane. What are things specifically that you've been looking at SVK over the past few weeks and months that looking forward into the next 12 to 18 months of crypto, which is probably longer in other industry terms, excites you the most?
Yeah, well, first of all, you had just talked a little bit about the ups and downs, volatility in price awareness and interest in the crypto space. You've given it 12, 4 months. I look at this totally different. I look at this as a generational investment. 20 years for an investment is probably too small for me. When I have made previous investments and when I look to our investment horizon, we're an 8-year fund with your additional add-on. I think even then in 10 years, we'll only be starting to get into products and services around the crypto space that will have real longevity. Like we're still so early in the space. Looking at DeFi, we're 2 years old and we've gone from, and I remember the first time I looked at DeFi Pulse, it was 750 million and then it was a billion. And then it's now 200 billion locked in DeFi. Like we're still only scratching the surface on this. So when we make investments, when I approach investments, I'm really looking for that longevity of generational wealth. And by the way, that constantly changes. It's almost like going back to the early days of the internet and trying to place your bets. Back when we had dial-up, you had no idea that the internet was going to go desktop and then mobile, and then apps were going to be created, and then we would then have that social media aspect of it. We couldn't foresee that happening, and especially in crypto, we just don't have that visibility yet. But what we must do is stay engaged and in the game, let the builders build, irrespective of the price. I couldn't care less about the price. It doesn't bother me at all where the price is. I don't even consider it a metric. Really, what we have to look at is the adoption, and irrespective of price being up or down, if I've got conviction on something and I've done the work, then I'm convicted. It will just be a certain amount of time that I can predict that the market will come to us. So really, the things that I'm liking and that we have liked, obviously anything around the DeFi space, we've loved different types of custody options, different types of compliance in AML and KYC. But when we look at DeFi now, it's very difficult for traditional TradFi to invest into the space because the infrastructure just isn't there in any way, shape, or form. For the crypto native funds that have done well in their own investments or that are syndicated, or that have raised money based on crypto, I think they can be a little bit more lighter around the regulatory side of stuff. But for real funds with proper mandates to allocate capital into the space, it has to mature, and it will. One company in the UK that we've invested in is a company called Credo, which is like a radically new infrastructure which deals with blockchain interoperability and light and fast settlement in a decentralized custody structure. Credo have recently done several rounds of financing, have recently reached a token, and there's something very exciting for us because they're looking at it as a more type of traditional option for DeFi funds to be able to settle without having funds at each of the different counterparties in exchange. So that's quite exciting for us. Then, of course, anything based around the fan engagement, I'm very interested in how the attention of personal brands and culture will also be captivated. I think that's really interesting. And anything around, obviously, the metaverse, when we start to see inbuilt economies within games, I think that's really, really interesting. And one of our companies that we had invested in 3 years ago, called Mythical Games, have just had a new fundraising with Andreessen Horowitz, and their valuation is now 1.25 billion for their game Blankos, and that's also a blockchain game with different types of NFTs inside. So anything around that cutting edge of pushing the boundaries forward, whether it be DeFi or anything in the NFT or anything around gaming, we're very interested.
Yes, definitely. Your note on fan engagement is especially pertinent to the kind of things that we're seeing today, and we'll touch on what you brought up with on anonymous venture funds and DAOs. But quickly, Anna, as one of our few panelists with experience in both the traditional finance and DeFi side of venture, how would you basically view these two experiences as something that are different? What do you see in TradFi venture that is not exactly the same in DeFi, and that makes DeFi more scalable?
Yeah, so in traditional ventures, normally once you raise money from external capital, like you have pension funds, you have hedge funds, you have high net worth individuals, you have a lot of different sources of capital. And the structure is more rigorous. You have to prove you have done your due diligence, right? You have to be able to prove you've done all data analytics, you've looked at all the economic factors, you've looked into the founders, you've looked into the dynamics of the deal, of the unit economics, and you made the best decision possible at the time. Whereas with crypto, and not necessarily crypto funds, like structured as institutionals, but we have a little bit less rigorousness because you have to make a decision much quicker. Companies are much earlier. Your industry is a lot more nascent. Data is not readily available. So it's more about a narrative and then looking into how your founders will fit into this and founders' executional capabilities, right? Mm-hmm. So you generally have two types of founders: the anonymous founders and the founders that come up with their faces and they try to do most things by the book. So investing in each of these categories is quite different. It's quite difficult as a more institutional person because you need to prove you've done enough research. The founders are the best founders you can back, and so on. So that's slightly the difference, and that's why DAO ventures can actually move much quicker because you just have 10 angels or 15, 20 angels just saying, I'm going to back it. Let's do it. That's one of the reasons why with Outlier we're structured as an LLP. We're a partnership. We're not an LPGP fund, because we want to maintain that flexibility and speed of execution and deal making. We want to be able to go with the market and not trying to follow where the market is like 3 years down the line. So yeah, we do quite a bit of investments. Like we're doing 120 next year. So it's I love, like, you still do commercial due diligence, you still do technical due diligence, you still look into the founders' backgrounds and the capabilities, but your bets are a lot more spread out. And once, like, the way we invest is essentially we get we are looking into things, anything that basically provides an exit from fiat and entering the metaverse. So that means, like, you need ways of generating income, which gaming is providing a really nice way. A lot of DAOs are being employers right now. They have all these bounties where they pay contributors. You can be community manager and then just go into generating your income streams like this. Then there's the compounding side of it with DeFi. And then you have essentially the spending, where you spend your time, you spend your money, which is like virtual worlds. You spend your time with like NFTs and different clubs, different collectives. And it's kind of like it's becoming like a closed economy, which is like self-sufficient economy. So this is quite interesting for us. And the analysis of everything is quite different as well. Like when it comes to traditional finance, you assess the deal, you assess the market, you assess the macro. Here, it's becoming a little bit like this again, but it was up until like a year ago, it was very disjointed. You were looking into different deals and trying to prove your thesis, trying to prove that investing in that specific identity company was going to work because they had connections to kind of generate, like, get to passports, or you had to be able to prove they get enough consumer adoption. It was same on the DeFi side. You have to make sure your founders are compliant with regulations. They don't really infringe on anything specifically. It's a very weird space to be in. But then again, with angels, you don't really have them looking at this as much. Obviously, people coming from traditional finance, then they say like that's nonsense, or I don't want to invest in something that may have regulatory troubles down the line. And then you have the angels that say, I don't care, I want to back something big. And then at the end of the day, if it grows, if it grows too big, then we're going to deal with whatever comes our way. If it doesn't, well, money is spent already. So
definitely, it seems like it's necessitated a sort of mindset change of what we think a startup looks like, what a venture partner should expect. And one other thing, like before we head off, I did want to touch on is something that both Vanessa and Shane, you guys brought up, and it's kind of that emergence of syndicates and anonymous venture funds that are employed through DAOs. For those who are unfamiliar, how would you explain how this is going to transform the way that we invest today into the next 3 to 5 years, into the next era of investing in Web3?
Yeah, I got it. Maybe I'll just give a quick view and I'll pass it over to Vanessa then, because I'm really got to focus on time. I think obviously the deployment through DAO structure is very interesting. I absolutely love how DAOs, I love the principles of how DAOs work in regards to governments. However, when you're looking to make investments on the venture capital side, it's not just all about capital allocation. It's not just about the money. Everybody has money. It's really about what added value you bring. And really, when you're looking at a traditional venture capital firm, you can bring a lot of value. And I think it's really important in this early nascent stage that you have a supporting network around the entrepreneur. You can use your experiences with what is required to scale the company. You can help with introductions and partnerships. You can really tap into your Rolodex of contacts and also have cross correlation between your portfolio. So I do very much believe in the DAO structure for all the positive reasons. However, at this point in time, because my experience has been a traditional venture capital, there's a lot of added value that we can bring. And sometimes the DAO structure, you're not going to get that because of fundamentally the way they're structured. So I tend to preference the typical and traditional type of venture capital because of the added value. But I do think that in the future, as we probably become more decentralized in that way, autonomous, then DevVirtual Virtual is a better view.
So let me take over. So essentially, with the, yeah, that's fine. With the syndicates and investment DAOs, like you have a couple of variables that change the way you invest, right? The variables that in play here of time, much quicker decision making, depth of due diligence. It's variable depth, not always going down, not always going as deep as others would normally go. So your due diligence time goes from like 30 days or 30 days or like 2-3 weeks all the way down to like less than a week. And then you have post investment support, which is as a collective of all specialists and individuals, you can deploy talent much quicker. You have people that are much more plugged in into the ecosystem, what a venture fund needs to build as venture partner network or as a mentorship network. You get it from syndicates and DAOs and collectives like this. You get it straight away because you have founders, you have investors, you have people from all sorts of backgrounds, and everybody has vested interest to help that investment. That's something also, that's partially why we're structured with Outlier as well, because some of our investors are like really plugged into the ecosystem, and then we can plug them in with the startups. But if you're a more traditionally structured venture fund, really need to build this yourself, and until you have it to deploy it with the founders, it's difficult. It will be getting increasingly more difficult to compete with the venture DAOs. Obviously, structured funds provide different value adds and different value. They're more patient capital. They move a bit slower, but then post investment they may be a bit more useful. So it really depends what you're looking at as a founder.
Yeah, so I think the role of the VC is changing already. Traditional VC, of course, we provide support, connection, hiring, perspective on tech, etc. But I think as we're investing in decentralized entities, VCs need to come in as contributors and members of the DAO also, and ensure that because think of it, once the entity is decentralized, equity doesn't mean anything. What how you can influence the community is what is important, because you're not just looking at a group of founders, it's an entire community. So coming in the DAOs, coming in and investing directly in some investment DAOs or other more specialized DAOs like NFT DAOs, etc., is really important in building that relationship. And I think one of the speakers said that now you have a community of founders, builders, investors, and it's all the same people, right? So that's important. And I think in the future you'll see, VCs structured as DAOs in order to work more closely with founders and the community. So remains to be seen. There are some challenges with that.
Well, thank you so much. I really appreciate all the insights and information that you guys have shared with us today. And I know we've already gone off over our time, but I would just love to share the opportunity for any of you guys to share any last parting notes or things that you're excited to work on or seeing in the future before we head off.
Keep it crypto, think long term, stay in the game.
Yeah, in that vein, I would say focus on decentralization and the end vision. Taking shortcuts may be good for the short term, but it's not going to serve us in the long term.
It's awesome. Anna, any closing words?
Yeah, well, for me, it's essentially like just build anything that provides exit from fiat. Just let's help the next generation build some wealth, and let's enter the metaverse and just build it in a much better, nicer way, right? Let's not fall into the same mistakes that Web 2 fell with privacy, selling, and all these things. We have a great opportunity to rebuild from the ground here. So
Definitely. Well, thank you all so much for joining us. Vanessa, I hope you enjoy the rest of your time in Portugal, and Anna and Shane, wherever you guys are based out of right now. And hopefully we can catch up at some point soon. But everyone, thank you so much for joining us. And I hope you enjoy the next event.
Great job on the event. Great questions. Thank you for moderating. Nice to see you too, pal.